And it's a brand new month right here in Lagos, Nigeria. Another half hour of markets, analysis, insights on business incorporated live from Channels HQ coming up in the next 25 minutes. South Africa's National Treasury agrees to provide 47 billion rand support, a package to Transnet. Kenya's November inflation rate drops to 6.8% despite increase in prices of goods. Plus, US dollar drops ahead of Jerome Powell's comments later today. Hello, welcome to the program. I'm Ladi Williams. First off, let's kick off with the markets, starting with major equity markets we track right here in Africa. See the NGX in positive territory, 0.12%, not looking bad at all for the first trading day of December. South Africa's index is also more positively in the green there, 0.64%, more convincing jump there we see in South Africa. In North Africa, markets we track there, we see the EGX30 closed down yesterday, while Nairobi, the Securities Exchange, that closed lower, 0.45% on yesterday. Let's get a sense of what's happening right there on the trading floor. Joining me now is Samson Owolabi, Associate Research and Portfolio Management, Zcrest Wealth. Great to have you on the show.
Yeah, thank you for having me once again.
Fantastic. So how would you rate the month of November, and what are you seeing coming for December in the equities market?
Okay, well, concerning that, for the month of November, I think it has beat my expectation, because when you look at the market, normally in the month of November right now, we usually see this kind of a negative sentiment, and then we'll now see the December rally boost activities on the NGX. However, for the month of November, right now we are seeing this kind of improved positive sentiment, and that can be linked to the fact that there's been some policies in place, and there's also been some news that also boosted performance in the market. And when you say at the tail end of this month, you realize the fact that the CBN governor, through his remark at the CIBN dinner, he made mention of the fact that there's a possibility for a recapitalization of the banking sector. So this particular news is driving sentiments in the banking sector, as people believe that there's going to be some mergers and acquisition in that particular space. So all those things have been the major factors that have been boosting the market over time. And we can see that the banking sectors remain the major drivers of activities on the NGX.
I guess it's safe to call November the month of new highs for the NGX.
Yes, it's safe to say that, we've crossed the 70,000 points. We are at 71,000 now. Currently, as of yesterday, we are like 71,300 plus. So that particular figures is showing you these are all-time highs. And this is showing this kind of a positive sentiment that equity investors, domestic players especially, and also some institutional players, they are more interested in the equities markets, given the fact that it has been doing quite well since the beginning of the year.
And it's quite incredible. We still have sky high, inflation at this time. Rates are still, at the highest, but we're still seeing the equities market perform so well in 2023. Is this going to be the same case in 2024?
Well, for 2024, I still believe that the positive sentiment is going to be sustained, and is going to continue, because when you look at activities in the market, you realize that it's more of domestic players that are in the space, and the equities market has been the market that has been able to beat inflation. We've seen, we've recorded year-to-date returns of like 35.8% as of the end of October, and currently at 38% year-to-date returns for the month of November on average. So when you look at these figures, it's showing us that the equities market is a safe place for investors to be if they want to beat inflation, which is one of the reasons why we might see more activities of investors in the equities markets.
Yeah, I guess the battle against inflation rages on. But we see President Tinubu has presented the 2024 appropriation bill. What stocks are you seeing benefiting from government spending in 2024 and sectors?
Okay, so for that, thank you very much. We can also see that there was a significant part of the budget that was being allocated to capital expenditure. So when you look at that space, you realize that the cement players are going to be the one that might benefit from that aspect. And also there's this part that says about security. There's this increased spending on security, and when you look at it, it's telling you that for farmers they might be having this kind of a more confidence to go back to the farmlands after all the insecurity issues that we have seen since the beginning of the year. So we might see the industrial growth sector and some of the agricultural sector also they might contribute from this budget from these new budgets. However, for me, I still think that what is going to drive the sector's performance on average for the next year is going to be the policies that we make and also earnings results.
All right, what are you expecting for December? Is the Santa Rally programmed for the NGX?
Yeah, I believe the Santa Rally is still there. We are still going to see that sentiment because, most times at the end of the year, people tend to reshuffle their books and also trying to make sure that their books are looking as impressive as possible. And over time, the Santa Rally is always like a major factor for December. So it's something that we should still be expecting. And also given the fact that there are some news concerning the banking sector about the recapitalization. So we are still going to see more traction in that space. So there's possibility for the Santa Rally.
All right, we'll definitely be tracking that right here. Thank you so much for coming on. Samson Owolabi, Associate Research and Portfolio Management at Z Crest Wealth. Thank you.
Yeah, thank you very much for having me.
All right, let's get a sense of what's happening in the Middle East. Markets we track in the UAE still trading at intraday, but it's negative territory there, 0.26 and 0.23%. That's down for UAE. Elsewhere in the Middle East, we see Saudi and the Qatari index both closed today, but closed in the green yesterday, 0.67 and 0.50% respectively. Not looking so bad right there in the Middle East. Looking out for how it closes in the UAE. Well, let's get a check on what's happening in Europe now. See, the UAE is hosting COP28, the annual UN Climate Summit. On the first day itself, world leaders agreed to establish and contribute to a historic loss and damage fund to help vulnerable countries deal with the impact of climate change. For more on this and other developments around the climate summit, we have Wada Imran from Berlin. Great to have you on the show. So, Wada, tell us about this special fund and Germany's reaction to it.
Thanks for having me, Ladi. Yes, the Loss and Damage Fund that is meant to help countries at the risk of impact of climate change has been established, finally. For years, countries and climate activists have been rallying for this fund because vulnerable countries have had to deal with the financial cost themselves of climate-induced events like floods or heat waves or prolonged droughts. Now there will be a fund available to help. At last year's COP, Pakistan, that had experienced devastating floods and heat waves, had been one of the strongest calls for this fund. This year, on the first day itself, this fund was approved. Germany was one of the first countries to pledge a donation for this fund. Host UAE and Germany both pledged $100 million. The UK pledged $50 million. The US only $17.5 million. The EU and its member states, excluding Germany, pledged $145 million. So it sounds like it's a lot of money, but one of the biggest polluters, the US, did not come through with a big pledge. Now, Germany wants China to step up and donate to the fund as well. A German federal minister said the UAE donating shows that other countries that emit a lot of carbon should come forth and offer more support.
And we know fossil fuels is a big focus of this COP. How are world leaders responding?
Well, fossil fuels and the controversies around the COP presidency, they're both connected. Sultan Al Jaber, the COP president and also the head of the state-owned oil company ADNOC in the UAE, has drawn a lot of attention. Prior to the summit, many activists were really surprised at the fact that an oil company boss is also the boss of a climate summit. Many had even called for his removal, including some world leaders. But Al Jaber has said that the role of fossil fuels must be included at the UN's climate talks. And I think he meant more than just how to phase them out. I think he was sort of hinting at the idea of keeping fossil fuels around. And I mean, if anything, the UAE's presidency of COP has brought state oil giants to the table. Previously, a lot of conversation was about Shell and other big private oil firms. But to truly tackle the issue of fossil fuels, all stakeholders must be at the table. And it's interesting that those who totally oppose fossil fuels sit with advocates of it and they debate for days to see the road ahead. Whether that will mean any conclusive policies or measures regarding fossil fuels, we'll know soon enough.
Definitely soon enough. Now let's turn to the markets. Now, what are investors looking at today?
Well, after what seems to be a rather successful November, where a number of companies in stock markets posted some rather positive numbers, investors are looking towards a brighter December here in Europe. Expectations are on the rise that central banks over the world will soon start cutting rates. But as clockwork, there are some comments expected from U.S. Fed Chair Jerome Powell in the day that could set the tone for December. Lots of manufacturing data coming out from across Europe, which should give an impression of the bloc's collective economy.
All right, all eyes on Jerome Powell's comments later today. We'll definitely be tracking that. Thank you so much, Ward Emran, DW Channel TV correspondent. Thank you so much. All right, let's get a check on what's happening in the U.S. now. See, stock futures were mixed today after the Dow Jones Industrial Average notched a new 2023 high and capped off its best month in more than a year. Futures tied to the 30 stock index extended gains 0.11% to the 6,051 points for the Dow Jones Industrial Average. S&P 500 futures, that's marginally up about 0.02%, while the tech-heavy NASDAQ, that's down 0.10%. That's looking at the futures market. Traders are waiting what Federal Reserve Jerome Powell will say later today, but we'll see the dollar already reacting to that, down today. And enhancing youth entrepreneurial development and investment opportunities is one of the ways to improve Nigeria's economy. That was the focus at the African Entrepreneurs and Investors Roundtable held in Lagos. Speaking to Channels Television at the event in Lagos, stakeholders called for the implementation of favorable policies that will enable such businesses thrive.
It is a call to the policymakers, especially the government representatives, that we should create an enabling environment for businesses. We should, harp on policies that would encourage businesses to thrive, especially to provide, support for young entrepreneurs and even established entrepreneurs. This is a major call for policymakers to create that enabling environment for businesses to thrive. Because as we all know, Africa, as I always say, is we have a resilient spirit. We are entrepreneurs naturally.
To talk to young people, most importantly, about building the culture of entrepreneurship, and which is something that is a very key focus from all stakeholders within the African continent today, to reshape the continent, to have young men and women who can conform to the entrepreneurial culture and also build businesses and compete with other businesses anywhere else in the world.
All right, let's get a check on the metals market. We see gold prices are set to mark a third straight weekly rise today after data showing cooling inflation cemented bets for rate cuts in the U.S. The traders looking forward to the comments also from Chair Jerome Powell. We see spot gold, that was about 0.2% to $2,039 per ounce after making an over $60 rise in November. That's its second straight monthly rise. U.S. gold futures for February delivery rose by 0.1% to $2,059. I would say OPEC oil producers have agreed to voluntary output cuts totaling about 2.2 million barrels per day for early next year, led by Saudi Arabia, rolling over its current voluntary cut. Join us now is Mr. Nick Agule, oil and gas expert. Great to have you on the show. Good afternoon.
Good afternoon. How are you doing, Ladi?
I'm fine, thank you. Great to have you. So I see prices didn't really react positively to these cut pledges. Why do you think prices are not rising? Because at the end of the day, when we see cuts, normally we see price rise.
The reason why prices are not rising is because the cuts are voluntary. If it was mandatory cuts, of course, the market would have reacted to that. So you see that with a voluntary cut, the market is still looking at it, processing it, and thinking that there could be compliance, there might not be compliance since it's not mandatory. And so I think the market is adopting a wait-and-see game.
Yeah, definitely a wait-and-see game. And talking about wait-and-see, we see Brazil, they've agreed to join OPEC by January. How do you see this addition impacting the group?
Brazil produces 3.2 million barrels of crude oil per day on average. It's a big production. I mean, if you look at Nigeria, that is almost like double Nigeria's production. So the addition of Brazil to OPEC is going to impact on the powers of OPEC in the international oil and gas business. It also shows the attraction of OPEC to oil producers around the world, because let's go back in history. You see that OPEC started with 5 members in 1960, and now they grew to 13 members, and then we now have 10 other countries who are not OPEC members but join OPEC in production cuts and all the other measures that are taken. So if you add the OPEC members plus those other 10, that is what you have. That's what you call OPEC plus. So now we have OPEC plus with giants like Russia being part of that, and with Brazil coming in shows the strength of OPEC, and it also is an indication that interesting times ahead lie for the oil industry, the global oil industry.
And talking about interesting times ahead, we're expecting the Dangote and Port Refinery in December. We're in December right now. What do these cuts mean for supply to these refineries? At the end of the day, we know Dangote Refinery has secured a cargo, at this time. If they come on stream, how do these cuts impact the refineries?
Well, so the first and foremost, Dangote Refinery has gotten an agreement locally to get a supply of products into their refinery, about 500,000 barrels, I think, of supply of crude to the refinery. And there are other local suppliers that could also run deals with Dangote Refinery. But at the end of the day, OPEC looks at global oil demand vis-a-vis global oil supply. And then they tweak these production outputs to be able to determine price. So normally, if they cut output, they're expecting price to go up. And if they discover that probably price is not too high and now it's becoming an injury to global economy, they increase output to try and bring prices down. So if Dangote enters the market and begins to demand for crude, OPEC is going to add that to the quantum of global oil demand, and the subsequent production output targets will now take Dangote Refinery on board as well. So I believe that it's not a risk to Dangote Refinery. They will still be able to get all their 650,000 barrels of crude oil if the refinery goes on 100% output.
And I would like to get your context here. Do you see these refineries coming on stream this month?
The Dangote Refinery, like I said earlier on, I think there's a big problem with the Dangote Refinery. It's possible that the Dangote Refinery wanted to have a Guinness World Record entry to be the largest single train refinery in the world. But that has its own downside. The downside is that you have this massive refinery, 650,000 barrels, all in a single line. What then that means is that that single line must be 100% ready. If there's anything wrong with that single line, that entire refinery is going to be down. So, I mean, like I said, if I had a way to have advice before the refinery was designed and final investment decision was taken, would have been to have a 2 to 3 trains Dangote Refinery with about 200,000 barrels each, with the other one being 250,000 barrels, so that with these 3 trains, they could have got 1 train ready and running now. And even if the other 2 trains are down, the refinery will be operating. But now Everything has to be 100% right before the entire refinery kicks off. And I hope and pray that they are able to start production. They're able to get their acts together, start production, because Nigeria really needs to start refining locally so that we will stop paying this high cost. I mean, people who are driving into petrol stations as we speak, they are not just paying for the cost of the crude that was used in refining the petrol. They are also paying the salaries of those working in refineries abroad. They are paying for the cost of shipping those products back to Nigeria, paying for insurance costs, paying for port handling charges. I mean, these are all costs that we will not be paying for if we have our local refining. And it's not just Dangote Refinery. Let's not forget that Nigeria also has got 4 government-owned refineries. And these refineries have been down for a long time. And the NNPC, the government-owned business that has been handed these refineries to run, has not been able to produce a single liter of petrol or any petroleum product from these refineries for upwards of 20 years. And I think the government of President Tinubu needs to do something about this. We cannot continue doing the same thing and expecting different results. If the NNPC have shown incapacity in running these refineries, then time has come now for the government to take these refineries away from the NNPC and hand them into private sector operators, either on a lease and operate basis or an outright sale, so that we can have this 450,000 barrels of capacity in our local refineries to also come on stream, so that if Nigeria achieves self-sufficiency in local production of petroleum products, that will be a good thing for us. And at the end of the day, by the time Dangote comes on stream, we'll be talking about over 1 million barrels of crude being refined in Nigeria locally. And that will even mean that we can export our crude to the export market, you know, and earn more dollars. And that will also help with our foreign exchange crisis, because you see, this importation of petroleum products is one of the biggest, in fact, is the biggest problem of our foreign exchange crisis, because every single naira that is being used now to buy petrol, diesel, gas, engine oil, and kerosene in our petrol stations today will be converted to dollars, so that we go to Singapore or to Rotterdam or to the US to go and bring in products. Assuming we are not chasing the dollar with so much quantum of naira, the foreign exchange market will begin to take a breather. You know, so it's so important that we deal with these local refineries, just as we expect Dangote to come on stream.
Yeah, we're definitely expecting, and I can't wait for a time where I'm reporting that Nigeria is actually exporting PMS and other products. That'll be great times. Thank you so much for coming on, Mr. Nick Agule, oil and gas expert. It was great having your perspective today, and happy new month.
Thank you so very much, and happy new month to you, and happy new month to Nigerians.
Thank you. All right, let's get a check on other stories now. See, Transnet Limited's bonds gained the most on record after South Africa's National Treasury agreed to provide a 47 billion rand support package to the nation's beleaguered rail and port operator. According to the statement, the company will be able to access 22.8 billion rand immediately under a guarantee facility. The Treasury said that the Transnet will have to meet strict guarantee conditions for the rest of the funds to roll in. And let's get some inflation reports now for November. We see inflation numbers dropped to 6.8% from 6.9% in October. That's for Kenya. This despite the increase in the prices of commodities, including fuel, transport, food, and electricity. Latest data from the Kenyan National Bureau of Statistics shows that there was an increase in prices of food and non-alcoholic beverages between October and November 2023, accounting for about 0.4%. Though that index is lower than September and October, which recorded a 1.3% price increase. And that's how your money performed at intraday. Looking out for the close of trade for the first trading day of December, that's for the NGX. Well, I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.